But the key benefits, what we're talking about today, why multifamily? Cash flow, cash flow, cash flow. Cash flow is extremely important because one, if it doesn't cash flow, you need to let it go. That's number one. Whereas that we're able to generate passive income by renting out these units, because guess what? The property is going to pay way more than what we actually have to pay in expenses, what we have to pay in our mortgage, and all the money that's left over, it goes to us, the owners. And on the multifamily side, it may be more than one owner. And it may be two, maybe three, depending. As you get larger, you may have multiple owners that are part of the syndication. And we'll talk a little about that. I primarily focus on small apartments, whereas that is a joint venture where it may be just a handful of people, maybe two or three, maybe 5, 6, but it's a small group of people that's on the same page. They're like-minded, have the same investment horizon. They're interested in cash flow and they want to own long-term. And so we're going to talk about some of the different strategies along with that. Reduce risk through diversification. Now, guess what? If you only have one single family rental and somebody moves out, how much income do you have coming in? That's a trick question, but it's zero. You have nothing. They moved out. But if you have a 10 unit and one unit where one person moves out, your occupancy doesn't go to zero. It goes to 90%. And so that's one of the benefits with multifamily, that you kind of diversify and you reduce risk because you have more residents that are paying you each month. And so you're not beholden to just one individual, or if something happens now, all your eggs are in that one basket. Economies of scales equal faster. So you can have a 10 unit with just one roof, all under one roof, versus having 10 separate roofs. A lot of the units that we have, they have one bathroom in there. So it's only one bathroom that you have to fix. But if you have a 3-bedroom, 3-bath single family that you're renting out, now you got 3 bathrooms that you're responsible and have to worry about the upkeep and maintenance. So economy of scale. Now you have 1 yard that has to be cut into 10 units versus if you had 10 single families, now you got 10 separate yards that could be all on the different sides of town that you have to manage. And it makes it a little bit more complex. Professional property management equals time freedom. This is one of the big ones. I had to learn this the hard way because I'm one of those that, hey, nobody can do it better than I can. I had that mindset early on. And one of the things that you got to realize that your time is not free. Your time is expensive. Your time is very, very expensive because guess what? If your time wasn't expensive, your employer wouldn't pay you to show up for work every day. And guess what? If he or she is paying you $100,000 a year, then guess what? They're probably at least making $300,000 a year. Because if they weren't making money from your time and being able to leverage your time to be successful, then they wouldn't have you hired. And so that's one of the things that we have to learn really quick with professional property management is your goal as an investor is to find your next deal, to continue to grow, to work on your strategy. So if you're working the day-to-day tactics, we're getting the phone calls about the toilet being broke or somebody got late on rent and they have a sob story, then you're going to be losing time that you could be looking to find that next multifamily deal that's going to make you $500,000 over the next few years when you go through and refinance. And so that's the thing we got to realize, that everything comes with a cost. Everything comes with a cost. So professional property manager is a benefit. It gives us that time freedom, but then also ability to force appreciation, returns. I'll talk a little bit about this with the Montgomery deal, with those properties, what we're able to do on the appreciation side with forcing that appreciation and just the impact that's going to have to the bottom line for the valuation. Resilience in economic downturns, inflation hedge. Real estate is a hedge to inflation. We know right now, the last year or so, we've had extremely high inflation, all the way over 9%. Things are starting to come down, but we're still a little bit above. And the thing that people don't realize, the Federal Reserve said their goal for inflation is to maintain an inflation rate of 2%. So guess what? In 10 years, the US dollar is going to be worth 20% less than what it is today. Because what? 2% a year for 10 years, that's 20%. And so that's what people don't realize, that now, 10 years from now, if prices don't appreciate at all, that it's going to take 20% more to buy that same property that you own today. Think about it. The dollar is becoming more and more, it's becoming less and less worth in value. So now 10 years from now, you lost 20% of purchasing power. So now that building is going to cost 20% more. That's without any additional appreciation or anything happening. So that's why we love real estate, is because it's a hedge against inflation. And guess what? And usually as those values go up, because it's going to cost more of those dollars because they're worth less to buy our asset, rent has gone up over time as well too. And so now we're paying down our mortgage with money that's worth less in the future. And that's one of the reasons that we love real estate. Financing opportunities equal leverage. We talked about leverage of time with your employer. All our employers, they're using leverage by leveraging our time to build their product, or whatever it may be. And so that's the thing that we got to understand, that the financing allows us to leverage, because 10 years from now, when our property has went up 45% in value and we've been paying down our mortgage, guess what? When you go refinance the loan, the bank doesn't get any of your equity. They provide the money up front. And that's why it's leveraged, because they don't participate in the equity side of it. All that equity goes to the owners. And so that's what we really, really love about leverage, because it allows you to buy a lot of property and leverage the bank via the loan, that process, or other people's money, whereas that you can bring on other debt through individuals that can finance your deals in order to get into the deal. Because guess what? If we had to go out and pay $1 million cash for our property, then we may not be able to do it, but we may be able to go through and raise the 20% down payment, and we just only have to raise $200,000, and it makes it a whole lot more tenable at that point. And that's the power of leverage, with being able to get debt financing, and then especially when you're able to start talking about raising money to bring the money to the deal, that you're able to get in, and you're empowered to get in some of these great deals. Who right now that's in here tonight, clearly you're interested in multifamily. But who's committed to multifamily? Because it's one thing to be interested, but I want to know how many people we got in here tonight that's committed. They're like, hey, I'm looking to get my deal in the next year, in the next 6 months, to get my first deal. I just want to see who's in the room, kind of get a level set for the room, who's watching right now that's really interested, and not interested. I use the word interested, but who's committed? Because there's a difference. There's really a difference. Long-term wealth building equals generational wealth. That's what we're here for. I showed y'all my family. That's my why. That's why I'm here. That's why I'm building wealth. And that's why I'm taking the time to go through and, vet real estate deals when I get off work. Before I get out of the bed in the morning, I'm looking at Zillow, hitting my buy box for my 3 primary zip codes in Panama City. When I start looking across Alabama for the multifamily side, I'm looking, check my email from my brokers. If I hadn't heard anything from them, I'm reaching out saying, hey, what's going on? What's the latest? Anything, any news, anything on the economic side that just makes me, feel really good about my decision to invest in Alabama. For those that's in the community, I shared today the top 10 list that came through. I think was it CNBC, but they had the top 10 list of population growth states. And guess what? Alabama made the list. So that definitely made me smile. Like, yep, I know we're in the right area. We're doing the right stuff. And we're going through and looking for great deals out here.